Sorry about that. Yeah, not entirely sure why there was an issue with the stream. Sorry about that. Um, it's still in and out. Is it? Let me know. It looks like it's fine though. I'm just looking at the stream page, the stream metrics. He said repeat everything you said since 9:35. Fuck me. All right, do you guys have any questions? Audio delay. I don't see any. Honestly, I don't see any audio delay. Nima dog disliking this. That's fine, bro. You're free to do whatever you want. Um. All right. You think we bottomed? Okay. What did you say for the last 25 minutes? Fuck me. All right. No worries. Yeah, I don't know what the issue was with YouTube, but it looks to have resolved itself. Okay. What I was saying, what I was saying, was God, where was I? What I was saying was basically, I was reading something that somebody was saying. Um, yeah, yeah, it was a YouTube issue. Apologies for that. Looks to be better. Somebody was saying, "Oh, is the pre-COVID high still viable?" Right? And I was saying that this is an extremely dynamic situation, an extremely fluid situation with ever-changing data every single day. Right? You can't just stubbornly pick a position and stick to it. And usually the ones that are doom and gloom, constant spreaders of doom and gloom, are the ones that don't buy the dips. Right? So you see this each and every single time. I can't tell the future. So I can't tell you what the next CPI is going to be. I can't tell you if the next CPI is going to come in higher or lower than expected. Now, what I think is going to happen, like if today's CPI came in higher than expected, like if today's CPI came in at 8.3, what do you think the market would have done? You think that we'd see a 4% day on the S&P or a 5% day on the Nasdaq? No, we wouldn't. The market would have tanked. Now, here's what's so dangerous about not buying the dip, right? The bear market during a rate hiking cycle has never bottomed. Stream is fine now. One person says it's lagging. The bear market has never bottomed during a rate hiking cycle, right? So the rate hiking has to stop before the bear market bottoms. However, what happens if the next CPI comes in as expected or lower again, right before the Fed? The Fed is likely going to pause or do a very small rate hike, right? But what if inflation continues to come down month after month? Then what? You know, the dangerous thing about missing the bottom is in a situation where we're relying on constant data every single day, every single month. You have FOMC, you have GDP, you have CPI. There's so much. You have unemployment, you have PCE. The dangerous thing about not buying the dip is that what if this is a very plausible scenario. What if the next CPI comes in as expected or lower and we hit this 400 mark on the SPY? And what if the Fed then says, okay, inflation is starting to slow. We're at a risk of over tightening. Now we're going to pause and see what happens, right? We're just going to see what happens. We're not going to pivot. We're not going to reverse. We're just going to see what happens. The market will likely continue rallying or trade sideways or whatever. And what if inflation continues to come down? Then all of a sudden, this would have been the market bottom, at least for the foreseeable future. And the Fed would not likely have to aggressively tighten much more. They will likely continue to tighten a little bit. But remember, the stock market is forward looking. The stock market is not going to give you an opportunity to wait for all of the economic indicators to bottom before we rally. We've seen this chart time and time again, right? The stock market always bottoms before all of the economic indicators do. This is each and every single recession. The stock market bottoms before all of the economic indicators do. So, and if the Fed stops hiking, then, you know, that's going to give a chance for earnings to come back up, because remember that higher interest rates affect earnings and affects company valuations, because companies are valuated using a discounted cash flow model, which takes in the 10-year risk-free rate. So, you know, this is why not buying the dip, in my view, is so dangerous. And it's so crazy that people get ridiculed for buying the dip. Like, I see this, I create videos constantly. So I see this each and every single time when I talk about buying the dip, or what I'm buying, or when I'm going to start buying. You know, you get people that actually make fun of you, that say, oh, are you stupid? You don't know that the market is not going to bottom here. Things are so bad. Hell is freezing over, blah, blah, blah. But nobody gets ridiculed for buying this. Nobody gets ridiculed for buying this. Nobody gets ridiculed for, you know, spending $180 on Apple, or I don't know, $3,000 on Amazon. Like, nobody gets ridiculed for that. But those who are diligent and are really trying to create generational wealth, that are buying the dip and being patient, and, you know, buying quality stocks and indices and storing them away, keep getting made fun of, because the doom and gloom sayers think that they know it all, and think that, you know, the market is actually going to give them an opportunity to buy things when everything looks great, when the coast is clear, when, as a matter of fact, the stock market is the most forward-looking instrument out of any market in the entire world. The stock market is built on forward-looking information. The stock market is not built on what happened in the past. Everything gets priced in quickly. Traders react to it. And then when stocks get cheap enough to ignore, and it looks like the economy is starting to get better, that is when stocks bottom out, not after everything is okay. Look at when the stock market starts rallying. It is before earnings and payrolls and GDP bottom out. So, you know, those of you that I'm not saying that this is a lot of you, but those who make fun of people who buy the dips, eventually those people are going to get passed up again, and they're not going to start buying until the market is at the highs. Now, please don't mistake me for saying that this is the absolute bottom. I'm just saying that what if, nobody knows, right? What if the next CPI comes in lower than expected? Then what? What if the Fed does a 25 or 50 basis point rate hike, as we've seen with the CME Fed Watch tool, that now it's an 81% chance that the Fed does a 50 or less based on today's data. Yesterday, this was 50-50. Now it completely changed because of expectations, right? So what if that's the case? Then what? You know, what if this was the bottom? Is it likely? It really depends on data. If you asked me before today, I would say it's not likely that this is the absolute bottom. Is it plausible? Yeah, of course. We've seen much crazier things in the stock market, and the stock market is so Fed dependent that if the Fed actually stops hiking or slows down, the Fed will dictate the bottom. That we know for sure. The Fed will dictate the bottom. And if the next CPI comes in lower than expected, December Fed is not going to raise 75 basis points. Trust me on that. So, all right. It's all a game of psychology. That is, you know, very good way of putting it. Very good way of putting it. All right. You're good, not lagging, better. Okay. Do you guys have any questions? Jaden, are you shorting the golden? Please put all your questions in here. I want to answer as many questions as possible. Please. All right. Jaden says, Are you shorting the golden pocket? That's a very good question, man. I think that 400 level on the SPY is a psychological level. It really depends on the next CPI. It depends, honestly. I will likely open up a short. Okay. So I will likely open up a short. I'm just saying this preliminarily. I will likely open up a short here, which is a pretty high risk to reward short because I could set my stop limit above the resistance of this wedge here. But yeah, as of now, I will entertain a short at that level. I will. Especially before the next CPI data. But I will be monitoring commodity prices as well and demand and see whether the next CPI is likely to come in lower or not. But yeah, I would entertain a short there. That's a very, very good question. And speaking of shorts, shout out to those of you that shorted Bumble. We actually shorted Bumble yesterday. It was one of our analyst callouts, but we shorted Bumble after hours. Now, the reason that we're going to be shifting a little bit, not shifting, but I'm going to talk about sometimes when options are not favorable. Oh my God, I can't believe Bumble's up 11%. This thing was down 20% after hours. Puts would have gotten obliterated this morning. So what happened is Bumble after hours went from $21 all the way down to below 17. And we shorted Bumble as opposed to playing puts. Now, why that was such a good play, obviously we could have been wrong. But why that was such a good play was because remember that options premiums, if the option here's something that people don't understand, that novice options traders don't understand. If options premiums, if the stock doesn't make the expected move, right? So when you're looking at when you're looking at earnings, right? There's an expected move for the stock that is based off of usually an at the money strangle, okay? If the stock doesn't make the expected move and you're holding puts or calls and they're out of the money, even if you guess right, those puts or calls will get crushed because of IV crush, okay? So you can still pick a direction and be wrong when you're trading options during binary events if the stock doesn't make the expected move. So this is what a lot of people don't understand when they play options for earnings. You need the stock to make the expected move for your calls or puts not to get crushed. And what people do is they go far out of the money because they see the cheap options price. But if the stock doesn't make the expected move, then those options are going to get obliterated. So what we did after hours was we actually played a short on Bumble. And I actually posted this on, I think I posted this on my Twitter as well, but we played a short on Bumble, and Bumble dropped after hours. We made a quick 3K on those shorts, but Bumble dropped after hours all the way down to below 17. And obviously you could trade after hours if you're on a trading platform like Fidelity or Thinkorswim, and we were able to close those shorts out. But if you had bought puts and you woke up in the morning, your puts would have gotten crushed. So even if you guessed the right direction, and then now Bumble magically is up 11% somehow. So that is when, sometimes shorting a stock can be more advantageous than buying puts. And rarely do people think about this. They're just geared to buying puts because that's what they see online. So yeah, shout out to our analysts in the academy. And again, if you want access to all of our plays, link is in the description below. Obviously, we sent out this play. Oh my God, the 2-year futures are going crazy right now. We're up $1,400 a contract on these 2-year futures. And again, we sent those out as well. I sent that out when the 2-year futures had hit that 5% mark. So we're up $1,400 on that per contract. All right. And yeah, just go to thetravelingtrader.com if you guys are wanting to apply to the academy. All right. The CPI data did not come in hot. You guessed wrong. In your last video, you were fear mongering saying it was going to come in hot. That's why I never listen to people on YouTube. Well, James, then you probably didn't buy the dip. You probably didn't buy the 2-year futures. You probably didn't buy TLT, and you probably didn't short Bumble. So show me your plays. Show me your plays. Again, motherfucker, I'm not Nostradamus, right? Like I can't guess what the CPI is going to be, and that's not my job. Like if I was just hanging my hat on my ability to tell the future, then I wouldn't buy the dip. I wouldn't trade bonds. I wouldn't sell cash secure puts. I do these things regardless of what the CPI is going to be, because the stocks or the bonds that I'm trading are at a discount. And to me, there is a lucrative play there, because if I don't tell the future properly or correctly, I still don't miss out on those plays, right? So put your money where your mouth is, James Buchanan, and show me your plays. I'd love to see your plays. My plays are out there. They're transparent for everybody to see. Of course, I'm not going to guess every single binary event right. I'm not fucking Nostradamus, dude. And yet you say you never listen to people's opinion on YouTube, and you're still watching this. So what does that make you? All right. You think this is setting up for a bull trap? I mean, honestly, man, it's that's a very good question. It really depends on the next CPI, man. Like again, this is all data dependent. If the next CPI comes in lower than expected and the Fed halts, I don't think it's a bull trap. I think that's a legit rally. That's a legit rally. Because look, at the end of the day, right? At the end of the day, why is the market tanking? The market is tanking because inflation is hot. The Fed is hiking rates like crazy. That is eating into demand, that is eating into earnings, that is eating into company valuations, that is eating into spending. So if those factors start to chip away, then why would the market continue tanking, right? But it's really data dependent. So it's very hard for me to say at the moment. I did, as you guys know, weeks ago, put out this level here saying that this will be the next time that I take a short. And I still might entertain it, but it depends on next month. Midterm results out. I think most of the midterms are out. I don't know. You guys can tell me, those of you who are tracking this at the moment can tell me if they're completely out or not. Show us the braids. Oh no, I'm keeping them nice and tight this morning. All right, mine expire next week on the VIX too. Yeah, I wouldn't hold the VIX hedge here. The VIX was up 40% yesterday. The VIX calls I'm talking about, not the VIX itself. So, you could have closed that for profit, but I personally held VIX calls as a hedge through CPI, and that's fine. It is a hedge. It certainly doesn't outweigh the position that I have on the 2-year note futures or TLT, or certainly not any of the cash secure puts that we opened, or any of the stock buys that we made recently, right? Should you accumulate cash for the next FOMC? Do you think it wouldn't be as effective buying multiple spots until December? What do you mean by multiple spots? Sorry, Noor. I'm not following that. Thoughts on Burry's ETF bubble theory? That is actually one of the theories that Michael Burry was espousing that I actually don't agree with at all. But again, I'm not Nostradamus, and neither is he. How do you short a stock without puts? You simply click sell. you simply click sell to open, right? As you see here, we sold at almost 21. It was $20.88. You sell this to open and you buy it back to close. You're going to need a margin account to do it. You can't do this on a cash account. Do you think we are heading to that 400 in the next week? I mean, again, I'm not Nostradamus. If we take a look at how far we are from that 400, I mean, Jesus, we are only less than 3% away from 400. So yes, I'm going to go ahead and say yes. I mean, today alone is a 4% day, right? So we're less than 3% away from 400. But, you know, I've been eyeing that spot for a very long time. I didn't think we'd get there. I didn't know how we would get there, but that was the next spot that I was eyeing a short from. Can you show us where you pulled those fib lines? You're talking about on the SPY chart. On the SPY chart, these fib lines. So this one here, I pulled from the swing high that we saw back in August, right? All the way down to the swing low that we saw in October. And so we're measuring this way up. Oops, we're measuring this way up. This is why you start your fib. This is why you start your fib at the top and your pivot at the top and end at the bottom, because you're measuring the uptrend. When you're measuring downtrends, you start at the bottom for your pivot. And like if I was measuring this downtrend here, right, then I would start my pivot at the bottom to the top, right? But in this case, we're measuring the top. So I would start my pivot here and end here. And that's how I came up with that golden pocket. Same as all the other ones, right? So for this one, I started the, wait, which one? Yeah, I started the pivot here and ended here. And same thing for this one. I started the pivot here and ended here, right? So hopefully that makes sense. Good question, Joe. Good question. When I go to buy eggs, I hope I see it coming down from from $4 to $5. Yeah, I mean, inflation, look, context matters, right? So inflation is still high. So for those of you that are saying, oh, I don't know how you're saying this is good, blah, blah, blah. I'm not saying this is good. I'm saying this is good relative to what was expected, right? And this is good relative to what we've seen all year. Lowest annual increase since January. But inflation is still up, okay? It's just slowing, at least as of this CPI. Who knows about the next one? That's all I'm saying. Google was a buy in the 80s. Yes, Google was a buy in the 80s. We bought Google and we bought Amazon. So, yeah, I mean, again, we've been buying the dips on these major discounts here. Like, to me, when I see the reason that I was comfortable buying Google, the reason I was comfortable buying Amazon is because when I take a look at their multiples, when I take a look at their earnings per share, when I take a look at their price to book ratio, when I take a look at how much they've declined, when I take a look at where they were pre-COVID highs, I was comfortable buying Google and Amazon at these prices, right? I mean, look, before this bear market happened, if you told me you're going to have an opportunity to buy Google and Amazon at 50% off, right? Who wouldn't jump on that? Everyone would act like they would mortgage their house to jump on that opportunity. So you're now getting it. Where's the money? Show up. So for me, I don't care if it's the bottom or not, because contextually and historically, this is around the time that you want to start making significant dollar cost averaging buys, right? I didn't know, and it could very well not be the bottom, but I don't care because I'm setting this up for the long term. Remember, bear markets are very temporary. They usually last less than a year. Go back to my recent video that I did, the last video that I did on YouTube, where I go over all of the bear market, bull market statistics and show you why over time the S&P 500 has never had a negative 20-year rolling return, never, in its 103-year history, right? So I know that the market will be back up. I know that that I'm not going to get the opportunity to create generational wealth for myself so many times in history. I lived through the dot-com crash, but I was a college student at the time. I didn't have any money. 2008, I had been working in software for a few years, so I had some money. So I bought heavy in 2008, 2009. And then we had the COVID crash. That's it, right? So 3 major crashes in my adult lifetime, and I really only had the money to buy 2 of them. That's it. That's it in my entire life, my 4 decades on this earth. So you're not going to have that many opportunities to buy significant dips. And when they come, you can let people make fun of you for buying the dips. You know, you're going to have the panic sellers and the naysayers and whatnot. But, you know, when I'm willing to buy the SPY at near 350, if someone's going to sell it to me, fine, I'll buy it, right? Who's the person that is offloading here and who's the person that is buying here? Who do you think is going to come out better in the long run? The person that is selling here at 350 or the person that is buying here at 350? So all right. Can you share your opinions on the stock influenced by the midterm elections? Yes. We've never not seen a rally 6 months after the midterms. I'll try and find the chart for you. But again, I mean, I put all of this in my last video. Where, see, again, this is why Twitter is a superior curating tool, because all of my thoughts are here. And I get to refer to it if I'm looking for quick stats. Again, follow me on Twitter if you haven't already. I post daily finance content. But after the midterms, after every single midterms, 6 months later, we are green. Every single one. And 12 months later, we are even more green after every single one. And the effects are usually more significant if going into the midterms, it was a major down year. Usually we tend to see much more violent rallies the next 12 months if going into the midterms was a major down year. So yeah, you also have that, right? That the midterms are over. So I do expect to see the markets higher in 6 months than they are today, right? Adrian, your plays are not transparent. They sit behind a paywall. Bro, all of my, how many free plays do I give out on videos and on Twitter, right? And on Instagram sometimes? A ton. Yeah, of course you're not going to see every play or else there'll be no point to the academy. But all of the plays that I post publicly are transparent. Yes. Go back to my previous videos. How many times did I talk about TLT? How many times did I talk about my plays with XLE? How many times did I talk about my plays with other energy stocks? Like, they're all there. Somebody said they want you to trade for them every little step. I mean, look, I have no problem with someone asking me about trades. Not at all. I mean, that's why I'm here. I open myself up to public scrutiny. But saying that, you know, I'm not able to guess exactly what the CPI is going to be. Yeah, motherfucker, I'm not Doc Brown, right? Give me a time traveling DeLorean and I'll come back and I'll tell you what the CPI is going to be. But that's so stupid. Like, I don't, you know, my My 6-year-old nephew doesn't think like this. Do you think we reach highs within the next year? I just answered this, Jacob. So what from now till next month? I think we get a rally and potentially some chop, but I do think we are going to hit this level that I marked weeks ago. Somebody's saying, what a coincidence, CPI coming down for elections. Brendan, elections are over. The CPI came out after the elections. What are you talking about? This is such a, my God, like I can't. I can't. I bought TLT and I'm up right now. Average cost of 95. Exactly, Lewis. Exactly. And I sent that play out in a video. Should I keep cash for the next FOMC meeting? I mean, Noor, it's really up to you, man. It's really up to you. But yeah, I mean, I don't buy heavily on FOMO rallies. I just don't. I feel much more comfortable buying when things come down. Do you think soft landing is back on the table? Beto Aguilar. What's up, Beto? How you doing, man? I think that narrative is now going to be what you will hear. I don't know if that's back on the table realistically, but I think for sure that's what you're going to hear, because I do think that the unemployment will have to start ticking up as we see mass layoffs that haven't yet been reflected in the unemployment rate. How broad-based the recession is, I don't know, because this, as you know, Beto, this was the most telegraphed recession in history, right? The Fed was trying to force a recession before a recession actually happened. We don't typically get that luxury. So do I think it's back on the table? I think that narrative, you will hear it more and more now. Do I think that we will see a soft landing? I do think it's possible. If I'm playing this scenario out in front of me, like Minority Report. So if the next CPI comes in lower than expected and the Fed goes easy in, if the Fed goes easy in the next FOMC, then yeah, I could see the impetus for a soft landing, right? But if the Fed continues to go ham, regardless of what happens, then I think that they're going to break something eventually. So it's really this game of chicken between inflation and the Fed funds rate. So yeah, I do think you will hear it more and more now. I don't know. I do think it's possible. I just don't know if that's going to happen. It's very hard to say. Hey Z, after your last video, I bought the new Bob Pisani book. It's called Shut Up and Keep Talking. So far, it's excellent. Oh, thank you, Emmanuel, for the recommendation. I haven't read that one yet, but I'll definitely look into it. What do you think of TLT? I get confused on bond, treasury, equities. Janet Bush says. Janet, the reason that I sent out that play on TLT, and contrary to, was it Adrian? I don't know who had said that. To what he was saying, I actually put that in a video along with the 2-year treasury note futures. So TLT, the treasury note futures, those represent bond prices, okay? And bond prices and bond yields move inverse. So when bond prices go up, bond yields go down, and vice versa. Now, the reason that I bought bonds here is because we were at historic highs on the yields. So the 2-year treasury note was hitting the 5% yield. And that is typically high for a 2-year treasury note, right? So if I expect the yield to drop from there, if I think that 5% is a resistance level for the 2-year yield, and I expect it to drop from there, then I'm expecting the bond price to go up, which is what this is, right? Same thing with TLT. If I'm expecting, if now the CPI is down, meaning that bond investors are not expecting higher rates in the future, or lesser rates in the future. If they're expecting lesser rates in the future, then bond investors are going to now be buying bonds because they want to capture as much yield as possible. And if they're not expecting the Fed to hike in December, then to them, they might panic and think this is the highest yield that we're going to get. We have to start buying bonds like crazy now to capture this yield. The more that they buy bonds, the higher the bond prices go, which is why you're seeing TLT rally today. And the higher the bond prices go, the lower the yields get, right? So with TLT, you would only buy it if you're expecting rates to be subdued and for bond prices to keep going up and for bond investors to keep buying bonds. In my view, I think TLT is great for the long term because we've never seen 20-year plus bonds crash more than stocks. This is the first year in history. And this is the worst bond market since the Treaty of Versailles back in 1919, right? So, or was it 1920? Was it Treaty of Versailles 1919 or 1920? My dad would kill me for not knowing this. But this is the worst bond market we've seen since the Treaty of Versailles, right? And yes, for bond holders, that would cause panic. For traders and investors, you want to see these major dislocations in the market because these don't come around so often, right? These major dislocations, this is how people get rich. This is how you take advantage of severe anomalies in the market. Unless you think, as I said in my last video, and I recommend everyone go back and watch it, but unless you think that this is the end of the world, this is the greatest wealth transfer tool available to the average person, bear markets and recessions, right? It's just a matter of having the mental fortitude to survive through them. So yeah, in my view, if the Fed, if inflation continues to drop, so if the next CPI is down, TLT and Treasury futures will continue to go up. So hopefully, if you have any, sorry for the long-winded answer, Janet, but if you have any more questions on the relationship between bonds and yields, let me know. I'll be happy to answer them for you. But appreciate your question. I would use the DeLorean to stop bar to move from breaking Barca instead of fixing CPI. Janet says very helpful. Yeah. Nora says thanks for answering. Appreciate it. Yeah, thank you. Let's see. How much money did you lost when you started investing? I haven't lost any money since I started investing because investing is a long-term game. Trading, on the other hand, is a different story. I've lost initially when I started trading. I started trading options seriously in like 2010. And of course, initially I lost a lot of money during the learning phase. I've never blown up an account, thankfully for that. But yeah, investing, I've never lost money because I started heavily investing in 2008. So if I lost money investing since 2008, I don't deserve to be here. Let's see. Tesla split was a great free play. Yes, Luis. Oh, I like your last name, man. How do you say that? Luis Alberto Xolalpa? Is that Mayan? Is that last name Mayan? That's pretty dope, man. I've never heard that name. Tesla split was a great free play. Yeah. I mean, I always put out free plays. I don't know what that fool is crying about, honestly. You provide value. If I'm going to create an academy and I want to provide value, and we do provide a ton of value, right? We have the courses, the options course, the day trading course. We put out the day trading watch list. All my long-term analysis is there. We have stock plays, futures, options. We're teaching people how to trade every single day, like literally from ground zero. There are traders of all experience levels in there. There are beginner traders, there are advanced traders. We obviously have analysts in there too who do an amazing job. But if I'm gonna be providing all of that value, then yeah, I mean, what and we're trying to keep it a tight knit group to keep it manageable, so that we make sure that we answer everybody's questions. There's also the Zoom calls with me that I conduct twice a month, where you get to ask me any question. Like if I'm gonna keep it intimate to be able to answer everybody's questions, then what's the point of giving up all of those plays on the videos? I give a ton of plays. I give out a ton of plays on the videos, but what's the point of the academy, and what's the point of people signing up to learn how to trade if I'm just going to be giving all that stuff away in every video? So, trading is hard. It takes a long time to learn, and really our goal is to cut down the learning curve and the time it takes to learn, because there are thousands of traders in there where we're discussing strategies every single minute of every single day. Options, futures, stocks, we're discussing strategies, how to evaluate companies, teaching technical analysis. It's just a really great group, and I'm proud of the people that helped me run it, and I'm proud of that group. So, but yeah, I try to give you guys as much free content as possible. Like between my YouTube, Twitter, and Instagram, I create hours of content every single day, right? Hours of free content every single day. I'm trying to learn supply and demand points. Can you show us a real quick how to find the bottom and tops of the chart? Luis Alberto Shalalpa. It's Aztec. Thank you for noticing. Yeah, man, that's a pretty dope name. I really like the Aztec and Mayan names. Really cool. Can people be hopeful of withdrawing their funds from FTX? I don't think so, especially not with what is that guy's name? SBF or SFB? What the fuck is that guy's name? SBF. No, he came out and said, I mean, I think this dude might be going to jail, honestly. Allegedly, if the allegations are true, right? So the allegations are that he was using depositors' money on risky trades, right? Not sure what he was trading, but FTX ran into liquidity issues because of the deposits, the money that people were depositing. They were using it for they were leveraging that on their own trades. And you get what is it called? A withdrawal crisis? No, there's something, I can't remember what it's called. A bank run, right? When everyone goes to the bank to withdraw their money and they find that the bank is actually using their funds in a leverage capacity. If everyone wants to withdraw their money at the same time, the bank would go bankrupt. And that's exactly what happened at FTX. But he said, I'm sorry, that's the biggest thing. I fucked up, should have done better. But anyway, read this Twitter thread from SBF if you want his take. But if the allegations are true that they were using depositors' money to gamble, oof, I mean, that's a serious crime. That's a very serious crime. Beto Aguilar, I would use it. Oh, yeah. I agree with you. Also, we don't know if a new coronavirus is to come. Okay, Jack, I'm going to tell you this. COVID or corona, that is never going to affect the markets again. Okay? So you can remove that from your vision. That is never going to affect the markets again. A new virus, maybe, but not this one. It's so clear that everyone, including the markets, has been done with COVID as a fear for the longest time. Did you day trade ES? Thank you for asking, Janet. I personally didn't, because I was on here on the stream and trying to prepare for the stream. But certainly our group is continuing to day trade ES today. It was very hard to time this, by the way. Like if you woke up and you were waiting for the news on inflation, um, there was an immediate spike right after the inflation numbers came out. It was almost impossible to catch the initial move. So when you see that, unless you're in the play beforehand and you try to guess what would happen, you're better off waiting for a retracement and then jumping back in, because stocks will always retrace in order to address the imbalance, right? That's just the nature of equities. So, trying to jump in on this candle right after the inflation data is released was going to be pretty impossible. But see this right here on an intraday chart, this is called an imbalance, right? And this imbalance here is essentially what you'd want to trade. So if the market can come back here and address this imbalance at any point, then that would be your opportunity to go long again, right? And there are many different ways to find where in this imbalance it would stop. But, in general, if you get to the 50, like around the 50% mark of this imbalance, as long as you're playing within your risk tolerance, that is typically a good RR setup, right? But you can use a whole host of things, like you can use the Fibonacci tool as well, right? And you can see that right now, based on these pivots, and I didn't, obviously, I'm just answering your question. I didn't do this before. You could see that the golden pocket is right at the 50% of this imbalance here. So if we fell to this level, this is where I would long next. If you didn't catch the initial wave, which again, this pumped so quick, it was almost impossible to catch if you were trying to wait for the data to come out and then play, right? But I would essentially re-enter on an address of this major imbalance here. And if it doesn't happen, you just have to be patient, right? As opposed to try to FOMO this. Silas asked about supply and demand. I mean, yeah, man, it's there's obviously, you have traditional support and resistance, which I've explained in recent videos why I don't think that traditional support and resistance is actually useful when you're trying to day trade. It's because support and resistance levels routinely get taken out by liquidity grabs like this one, right? If you drew your support line here and you're like, when ES gets to the support line, I'm going to buy it and long it. However, you always see that it breaks right below support, picks up everybody's stop limit orders before continuing back up again, right? So, with that said, supply and demand tries to enhance your understanding of support and resistance. So instead of just drawing a thin support line, like if you were here and you're like, okay, I'm going to draw a support line, and if we get there, I'm going to buy, you would have already been stopped out. And we could talk about exactly why this happens. It is basically institutions looking for liquidity, and they find the liquidity in the form of stop limit orders and stop orders. But a supply zone would essentially, a demand zone would essentially try to account for not only try to account for support, but also try to make up for any liquidity grab situations that you encounter. So instead of a single line, you're going to get sort of a rectangle, like a block of where the demand zone would be. Now, what I do is I wait for liquidity to be grabbed, right? Like this is a sort of enhancement on my traditional, old school day trading strategy. So for instance, if you look here at resistance, if you were to say that, hey, this is my resistance point, I'm gonna go short here and I'm gonna set a stop limit right above it. Well, that stop limit would have been taken out as well. This is called a liquidity grab. And that's, again, because institutional investors are looking for liquidity in the form of your stop limits. Because if everybody's looking to go short here, including the institutions, then where are the institutions going to get buy orders from to sell to when they're trying to go short? Well, all of the buy orders are up here in the form of stop limits. So they're going to pump the price up, grab everybody's stop limits. Now every retail trader that's short is closed out, and the institution has all of their liquidity, and they're able to take this short, right? So what I tend to do now is I wait for liquidity to be taken, and then eventually, like I said, you're going to get a retracement that tries to resolve an imbalance in the market, like this retracement here. And then this is what I will take short, right? So same thing here. I wait for liquidity to be taken. And then, once the market is actually rallying on the retracement of the imbalance, that is when, on the retracement to test the imbalance, that is when I will actually go long. So hopefully that makes sense, Luis. Is there any significant correlation between real estate and stocks? Not really. Real estate is going to be more affected by interest rates and demand destruction than stocks. Stocks are it's a much more fluid and ever-changing landscape. So stocks can go bullish, bearish a lot more than a lot quicker and more often than the housing market. What do you think about buying Tesla at these levels? Is it a good buy? I think it was a good buy yesterday. Like what makes it not a good buy yesterday? Yeah, I think it's decent. I do think that Elon is messing around a bit too much with Tesla investor money as it relates to Twitter. But I think Tesla might have, I think it's a good buy here. Yeah, it doesn't mean we're not going to drop further. I can see Tesla going to 160, 150 range where this golden pocket is for sure. But it doesn't mean it's not a good buy here. If you're asking me if you want me to guarantee that Tesla's not going to drop from here, I can't do that. Right now, it looks like a falling knife. What does the volume profile tell us on an intraday chart? Okay, on an intraday chart, a volume profile tells you this. Let me pull up. I like these questions, by the way. Thank you guys for bringing the heat with the questions. I really like answering these questions. So here's a volume profile on an intraday chart. It tells you the point of control, which is the green line on my chart. This is for every session. I have it for every session, which is every trading day. That green line is called the point of control. It is where most of the volume has happened, right? Where the most buying has happened so far. And then you have the value area high and the value area low, right? Now, the reason that we use these volume profiles is to see really the singular reason that I use them is to see where the range point of control is, right? So like this point of control here from the previous day is a range that I want to look for. It's usually like if the stock market starts retracing, that is one area that I would look for the price to rubber band to, right? So you have the golden pocket, you have the point of control, you have VWAP. There are many different things you can use. But I always keep this up here because this is usually an area where the price will eventually rubber band to, right? So that's essentially what volume profile tells you, where most of the volume has been traded for the day. Marwan, would you say this is the end of the bear market? I answered this about 10,000 times already. But I understand people are coming to the stream at different times, but I answered this a million times already. You won't see an end to the bear market until the Fed stops hiking, right? excuse me, the Fed cannot, until the Fed stops hiking. What could happen here is if the next CPI comes in positive, I do think we're going to hit this 400 level on the SPY that I marked weeks ago, by the way. Go back and watch my TA Tuesdays, TA Thursdays. You'll see this exact same chart. But I do think we'll hit the 400 level on the SPY. If the next CPI comes in lower than expected and the Fed halts, then yeah, I think this is the temporary bottom for sure, and could be the bottom if the Fed announces during this rally that they're going to pause. Yes, I do think that could be the bottom. I'm studying at university to become an investment banker. Is this the sort of work I am to expect? No, not at all. They don't teach you this stuff in university. I was a finance major. I didn't learn any of this. I learned all of this on the street. I learned all of this on my own. I didn't learn any of this in finance school, right? Like, they teach you how to evaluate a company, how to discount cash flows, how to look at book value, how to look at PE ratios. They teach you about all of the fundamentals, right? They teach you about, obviously, balance sheets, income statements, cash flow statements, etc. But you do not learn how to do technical analysis in finance school, unfortunately. And you don't learn how to day trade. No, this is stuff you're going to have to pick up on your own. Are you still long TLT? Yes. Any target to close? No. Because if inflation keeps going down, the Fed is going to is more likely to do either lower rate hikes or pause, and that will continue to keep TLT rising. If you are long TLT right now, then and you feel like taking profit, go ahead and take profit. I just wanted to say you're the best on YouTube. Thank you, Arjun. Thank you so much. I followed others, got burned. With you, everything seems okay. If everything seems okay with the sick mother effer like me, I don't know what that says about the state of YouTube. Yeah, honestly, I don't. No, I appreciate you. I'm just joking. But thank you so much for the comment. I don't watch finance YouTube. I can only imagine how bad a lot of the information is, only because I've seen what it looked like in 2020, and I'm just like, what is this? But yeah, I'm sure that there are, a few creators that are sincere and have integrity and produce good content. But yeah, I don't watch it. Should I sell Doge and buy Microsoft? Really? If you're asking, man. All right. Will you short SPY at 400 no matter what? I don't do anything no matter what, Michelle. I don't do anything no matter what. Everything is contextualized. Everything is nuanced. Everything relies on dynamic new information that comes out every single day. So no. If you do something no matter what, you will lose in the market. The market is not an instrument to be stubborn with. You don't fight the market. So it really depends. I will wait to see what happens, honestly. Where did you learn about liquidity concepts and imbalance? I mean, over the years, there are a ton. So whether you're talking about like low traffic areas, which is a concept that I think was derived from Forex, whether you learn about FVGs or what they call fair value gaps, which is another concept derived from Forex, from a group or a person named Inner Circle Trader. Whether you're talking about air gaps themselves, whether you're talking about opening drives. I mean, there's a ton of liquidity concepts floating around, but it's just a general. It's regardless of which ones you follow specifically, the general notion is that the market looks to grab liquidity all day, right? That's what institutions are doing. They're grabbing liquidity at the highs. They're grabbing liquidity at the lows. They're grabbing liquidity at the highs. They're grabbing liquidity at the lows. So as long as you start studying that cycle, and you know that this is what happens, you are going to be more likely to take the right side of the trade. So if you're looking at liquidity grabs at the high, or what they call buy side liquidity, where they're taking out all of people's stops at the buy side, then you know that in general, we are likely headed down, right? And it's just a matter of knowing when to enter. And when to enter, usually some people play the absolute break of market structure. Some people wait for a retracement to get in, right? Again, I don't think it really, whatever works for you. I'm not saying one specific concept is better than the other, but the general concept that everyone who studies liquidity in the markets agrees on is that the market in general, every single day, all day, is looking for liquidity at the lows and liquidity at the highs, and liquidity at the lows and liquidity at the highs. And that's essentially the first step in the first thing you have to learn in knowing how to day trade. It's not random. It's all based on liquidity. The institutions need liquidity in order to make money. Where do they get liquidity? From people's stop limits. Hopefully that helps. Fred, I'm on the Discord, but I don't see the trades you sent out. What? Bro. Here are the options trades, right? And you can see the futures contract. Our ZT futures are up $100 per contract. Here are the stock alerts, right? Here was the XLE play. The short from yesterday was in the after hour short on Bumble was in the riskier section. Here it is. I mean, so you have options, stocks, we have day trades, right? Scalps, which are basically, even less time held than day trades, and usually you're going for small profits time and time again. And then we have the day trade watch list that's sent every single day. I don't know how you're part of the Discord and you don't see this, unless somehow you don't have the proper access, which in which case you should open a support ticket, but it's all there. Jesus, how many people are going to ask the same question? Guys, I've talked about whether I think this is the bottom or not. Like, how many different ways can you ask the same question? The market is going to rally if CPI comes in less than expected. CPI came in less than expected, market is rallying. If the next CPI comes in less than expected, market will continue rallying. If the Fed halts or pauses in December, market will love this. This is all data dependent. How are you guys expecting me to tell the future? If the next CPI comes in higher than expected, so let's say the next CPI comes in 8.3%, well, we're back to the fucking drawing board, and this thing is going to go back down. Everyone wants to know when the bottom is because they're afraid to dip their toe in. They're afraid to buy shit. This is when you want to, like, how are you afraid to buy here, but you're not afraid to buy here? Like, this is what I don't get. I'm terrified of buying here. Like, this makes me shake. Buying here makes me sleep at night. Like, I'm okay buying Amazon, Google, 50% discount. I'm okay buying there. But you know why? Because I know that I'm looking for an investment and I'm looking to triple my wealth or quadruple my wealth over the mid to long term. This is not an overnight play. Like, 2-year notes, TLT, Bumble short, day trades on earnings. Day trades on S&P futures. These are all short-term trades. And yes, you're going to be in and out. You're going to have exit and entry points. But if you're just asking me whether I'm willing to buy Amazon at $89, Yeah, of course I'm willing to buy it at $89. I don't care if that's the bottom, right? So everyone wants to know if this is the ultimate bottom because they now want to FOMO in after the market has rallied, I mean, shit, we're a 5% rally today alone. But everyone wants to know whether that's the absolute bottom because they want permission to buy. You don't need permission to buy. You look at a stock, you like its balance sheet, you like its growth trajectory. You know that these are circumstances where when the economy recovers, that stock is going to do fine. If you're betting on an end of the world scenario, then you have a lot more to contend with than just your stocks, right? So unless you think this is the end of the world, yeah, of course you want to start buying quality here. Like I don't understand how people are comfortable buying here, but not comfortable buying here. That just makes no sense to me. What was the worst play you've had this year? Rocket launcher. I really like this question. I want to answer. I want to answer it honestly. Let me see. What was the worst play that I've had this year? Ooh, that's a good question, Rocket. I have to think about that. I mean, obviously, like on binary earnings trades, like yeah, I've had you know, many losing trades this year. If I'm trying to guess the direction of an earnings trade, but one where I like really fucked up, I'm gonna have to think about that. I'm gonna have to think about that. I've had a couple this year where like say I've been trading ES futures or Nasdaq futures, and I I mean from time to time every day trader goes through this where you just don't want to believe that your trade is, excuse me, you don't want to believe that the chart is actually taking a turn and reversing the bias that you had initially thought. So if you thought that the bias was bearish and you went short, or you thought the bias was bullish and you went long, and you held longer than you should have, without really assessing whether market structure is shifting. Yeah, I've definitely had those this year. I think every day trader has those moments where they, for some reason, the ape brain comes back into play, and they just hold um longer than they should, and they're down thousands. Yeah, I've certainly done that this year. Obviously, like I said, binary earnings trades, but those are just 50-50 gambles. I'm trying to think of something where I fundamentally did something really wrong. Um right now I'm just going to tell you probably holding a futures trade too long. But I want to find a specific trade for you because I really like this question. This is a very, very good question. Um, oh, you know what? I put this in. Geez, I think I put this in the Discord, but there was one futures trade. Oh no, there was an SPX. Uh, there was an SPX trade where I bought SPX puts. Not realizing, like, it was something like this. Like I had bought SPX puts when we hit a certain demand zone or a supply zone, and didn't realize that we had an entire block above us, and the market just kept rallying, and those puts essentially went to zero. And I actually recapped that trade in the Discord, but what happened is later that day there was some news from the Bank of England that came out, and the market tanked, and those puts actually went up by 600%. But I remember before that happened, I wrote in the academy, I said, I'm going to recap this trade for you guys, whether it ends up being a winner or a loser. Um, yeah, but that's what I can remember. Um, how do you play the gap of the S&P 500? You buy it before today. That's how you play the gap. If you're talking about how to play it with options or futures, you want to wait. You want to wait for this imbalance to be addressed before retracing. So in this case, you would wait for um at this imbalance here. You could, if I turn on like the point 0.5 marker on the fib, you could wait until we retrace to a major fib level like the 0.5 or the golden pocket before buying calls on a SPX again, or buying calls on the SPY, right? That's how I would trade it. You don't try to breakout trade a 5% day. That just doesn't make sense. Michelle Allen, what was the best play you've had this year? Oh God. The best play I've had this year was probably early 2022. It was one of these crazy like 1,000% earnings plays. I can't remember which one. I'm gonna have to go back and look, but yeah. Yes. So Andres Mendez, in terms of a stock play, very poignant of you to remember XLE. So in terms of a stock play, it's been XLE for sure. And for those of you that watch this channel, you know that is something that I bought and announced it on a video too. We bought when it retested the support level and rode it like 30 something percent until where it's at now. And that happened in a very short time. And that was one of the only stocks that I had bought, during recent times, and bought in heavy because I believed in the energy play. And for those that don't know, XLE is the energy sector of the S&P 500. So, yeah. Kill that, bro. Yes, for sure. Besides inflation, what other factors can cause SPX to tank? Higher interest rates. Hazy, love your course. Appreciate you, Anil. Yash, what's going on, man? Haven't seen you in a long time. Glad to see you again. Should we consistently be buying in DCA at the time? Okay, let me show you something with DCA. Again, I urge every single one of you to go back and watch my last video. But I want to show you something. Where is that? In my last video, I went to, I can't remember where did I go? So if you DCA, right, let's just say that you start with $10,000 and you have a 35-year horizon until retirement. Let's pick a modest return for the S&P 500, which averages somewhere between 12 and 17% a year average. But we're going to say that you are buying in dollar cost average 500 every month. How much money do you think you'll have in 35 years? There you go, $1.7 million, right? And that's just with, that's with 1,000 down and 500 a year, right? So, you don't need a lot of money, and you certainly don't need to time the market if you are just looking to build wealth in the stock market over time. Now, weighted dollar cost average, where you buy in heavier when the market is tanking, if you know how to read a chart, that can definitely be more beneficial. But if you don't, and you just want a brainless investment, yes, you continue to dollar cost average, regardless of what the market does, right? Because you will be a millionaire. There's no two ways about it. You will be a millionaire. Hopefully you get that. All right. Thank you for your honesty. Most YouTubers pretend their trades are 99% in the money. Yeah, no, fuck that. I mean, uh, I've had tons of losing earnings trades, again, which is just a 50-50 toss. But in general, aside from earnings trades and aside from binary trades, the whole goal is to try to keep your money first, not make money. The first rule of making it in the market is to keep your money. So you try to minimize losses. And yes, of course, you want to maximize profits. Um, and usually I stick to very strict and solid RR rules, risk reward rules, right? But again, the ape brain kicks in, and every once in a blue moon, you hold something longer past uh, where you should have, right? Um, I would love to learn. Rodrigo Lopez says, I would love to learn in the academy, but life is busy with young kids and demanding job. How much time per day do you feel is enough to learn? It depends on every person. Um, it really depends on every person, but you don't have to learn during the day. There's paper trading tools, there's charting. You can do all this stuff at night. Futures trading happens 23 hours a day, 6 days a week. So that too, right? You can futures trade at night as well. So yeah, it really depends on the person. Dr. Jennifer Berry, what's going on? Good to see you in here. Check out LPG for an energy play. Chart similar to XLE with a $1 per share dividend. Okay, I will check this out. The only thing I will tell you, doctor, is have you looked at the dividend safety of this company? Because the dividend safety is not the same across the board. I think one thing that new investors get wrong is that they think that a dividend is for life, and a dividend can be retracted any single time that it wants, any single time that the company wants. So, you have to try to assess whether that dividend is safe or not. Look at its dividend history. Look at how long it's paid for that. Okay, just as I'm saying that, doctor, it looks like the dividend only started in August 2021. So it's a pretty new thing. It's very different from a company that's been paying dividends for 30 years. So just take that with a grain of salt. Yes, the $1 dividend is nice, but a company is not obligated to pay dividends. They're not legally obligated to pay dividends, and they can pull that dividend whenever they want. So right now, that $1 looks juicy. Is it going to be juicy forever? No. I mean, I'm not gonna say no. I can't tell the future, but it's possible that it isn't. Right. So keep that in mind. What's a short-term target on the S&P 500? Already talked about it. Been talking about it for weeks. Have not moved my trend lines or my golden pockets or this circle here. 400. That's my target. On XLE, I bought the shares. All right, let's see. Thoughts on Meta. You don't want to hear my thoughts on Meta. Trust me. Meta is a piece of shit, okay? Those are my thoughts on Meta. I personally don't believe in the metaverse. I don't think that there is a world in which Facebook is somehow going to outdo Apple and Google once they hit the VR space. I don't think anyone's going to be paying $1,500 for a Facebook headset to live in the Facebook metaverse. That looks like a Sims game. It looks like PlayStation 2 graphics. And they spent $36 billion on it already. They're continuing to hemorrhage money on it. There is no return for investment. There's no return on investment in the foreseeable future. Their ad revenue continues to flatten. Their daily active users continue to flatten. There really isn't anything, in my view, worth investing for me in Meta. Now, if you want to invest in it as a value company because you like its ad revenue, fine, but its ad revenue is not growing, so it's no longer a growth company, and I think its best days are behind it. Just telling you now. Is a day trading course options day trading? It's everything. It's day trading principles. And yes, you can use options or futures. Do you believe Disney will come back from this eventually? Yeah. I think their subscriber numbers are what's hurting it right now. All right. Any other questions? I apologize for the beginning of the stream, where I was having issues with the audio. But yeah, if you guys want access to all of our trades, hit that link in the description below. There's only a few spots left for November. Only a few spots left, so it would behoove you to sign up. You get access to the options course, day trading course, the Zoom calls with me. You get access to all of our plays. You get access to the chat with thousands of traders who are active and doing stuff without me today. We're talking strategies every single minute of every single day. Options, futures, stocks, etc. You get my long-term analysis. It's really a very worthwhile deal. So link is in the description below. Spots are going up fast for November, and then they won't open back up until December. Other than that, I appreciate you guys. Again, apologies. I apologize profusely for the audio issues in the beginning. Not my fault. Those were YouTube's fault. So sorry about that. But yeah, leave that thumbs up on your way out, and I will see you on the next live stream. I appreciate you. I love you guys.